I now hand the conference over to Mr. Sunil Bora, Group CFO, Minda Industries Limited. Thank you, and over to you, Mr. Bora.
Thank you, Aisha. Good afternoon and a warm welcome to all the participants. I hope you and your near and dear ones are all keeping safe and healthy. On the earnings call today, I am joined by my colleague, Mr. Tripurari Kumar. We hope you had a chance to have a quick look at our financial results and presentation that is uploaded on the stock exchange as well as the company's website. I will briefly discuss about the business landscape and then update on our performance in the preceding quarter, following which we will be glad to respond to your queries. The performance of the auto industry for the second quarter ended September 2020 has progressively improved with each passing month, with September volumes being best in the first half of the fiscal. Further, the October month continued to witness strong growth in the volume on the back of channel filling for upcoming festivals, wherein certain OEMs have also reported highest ever monthly sales. Strong demand was experienced during the festive period of Navratri, Durga Puja and Dussehra. A very good monsoon, higher kharif acreage and continued government support has ensured a very robust rural and semi-urban demand for two-wheelers and entry-level passenger cars. Urban markets, which were lagging in demand, are now fast catching up as well. The market demand sentiments were further supported by the preference for personal mobility. Tractor sales volume are expected to grow this fiscal over the previous year, primarily driven by a strong rural income owing to solid rabi crop harvest. Moreover, government initiatives in the form of a hike in minimum support price for kharif crops and increased budgetary allocation under MG and RES are supporting rural income. The auto loan interest rates are below 8%, the lowest in a decade, and that should also encourage customers to purchase new vehicles. During the second quarter, the auto sector volumes declined by 8% as against the volumes recorded for Q2 of FY2020. The two-wheeler segment declined by 7%, three-wheeler by 50%, four-wheeler by 8%, and CV segment declined sharply by 24%. According to SIAM, passenger vehicles auto volumes increased by 14% YOY in October, following an increase of 26% in September and 14% in August. The inventory levels for two-wheeler and passenger vehicles are also within a comfortable zone, with four-wheeler inventory around 30 days and two-wheeler inventory around 45 days. With the festive season continuing into November, the sales volumes are expected to remain strong. OEMs are also offering various festive discounts to further supplement the demand. As you know, the GST collections for October were at an 8-month high and crossed 1 lakh crore mark, and the service sector grew for the first time in 8 months in October. The above factors augur well for the economy in general and the auto sector in particular in the ensuing year. Coming to our performance, you may refer to slide 5 and 6. At the consolidated level during Q2 of FY21, the company registered a revenue of 1465 crores as against 1360 crores for Q2 of FY20, registering a growth of 8% year-on-year, despite the industry volumes in negative territory for the quarter. The revenue for Q1 of FY21 was 417 crores. Our product portfolio, kit value enhancement, and customer mix has supported in outperformance of Q2. EBITDA for the quarter was at 215 crores in comparison to an EBITDA of 162 crores during the corresponding quarter at the end of FY20. EBITDA loss for the preceding quarter was at 71 crores. The EBITDA has been positively impacted by short-term cost reduction initiatives and better operating leverage. The temporary salary reductions have been reinstated with effect from 1st of September. During the quarter, we had an foreign exchange gain of around 8 crores in other income, which is not part of EBITDA, but part of other income. The finance cost is lower on account of reduced interest rates and utilization of cheaper sources of funding like commercial papers. Depreciation has been higher due to amortization of intangibles related to acquisition of Delvis and commissioning of new alloy wheel plant at Supa. Accordingly, the profit before tax, before exceptional items for Q2 FY21 was at 129 crores as against profit before tax of 69 crores in Q2 of FY20. The growth in PBT is largely on account of better operating leverage and lower interest costs. Our tax rate for the quarter is at around 34%, primarily due to the reversal of deferred tax credit generated in the first quarter, which was at the full tax rate, lower book depreciation versus tax depreciation, and non-extension of R&D tax benefit. For full year, we expect our cash rate to be around 24%. Our profit after tax, which is MIL share for the quarter, was at 81 crores as against 49 crores in the corresponding quarter last year. Moving to the product lines, you may refer to slide 7 and slide 8. First, to start with switching system, the segment achieved revenue of 471 crores for Q2, contributing about 32% of total consolidated turnover. We are localizing sunroof, gear shifter, and neutral switches for passenger vehicles. Our kit value has also been positively impacted in two-wheelers due to changeover to BS6 and additional features like USB and side stand switches. Moving on to lighting businesses, it has achieved revenue of 363 crores for Q2, contributing 25% of our total turnover. Our two-wheeler business has received new orders from RE, Meteor 350, Chetak, TVS iQube, Honda Heinz. In four-wheeler, we have for the first time received an order from MSIL for LED tail lamp with rear fascia. Moving to light metal technologies or LMT business, it has achieved a revenue of 180 crores for Q2, contributing 12% of our total turnover. The LPDC wheel light under commissioning stage, and we should be ready for customer inspection in Q4 of FY21. On our two-wheel alloy wheel project at Supa, 2 lines have been commissioned out of 4 lines. The remaining lines are expected to be commissioned by March, and we expect stabilization in a couple of quarters thereafter. Coming to our acoustic or horn businesses, the business has achieved revenue of 167 crores for Q2, contributing 11% of our total turnover. The Indian business received first ever order for electronic horn in India from M&M PV division. Moving to other product businesses, which has achieved revenue of 283 crores for Q2, contributing 19% of overall top line. We have started supplying sensors, which is wheel speed sensor, to our courier customers. If you see at a high level for 283 crores, it largely consists of 50 crores of sensor sales, 45 crores of blow molding, and 30 crores of ICs. Total borrowings as at September 30, 2020 were at around 1152 crores compared to 1159 crores for Q1 of FY21. Approx 298 crores of cash was available as at September, resulting into a net debt of around 853 crores. Moving on to slide 9. In terms of our revenue pie for the quarter ended September 30, 2020, OEM business accounted for 86% of total revenue and aftermarket businesses around 14%. And in terms of segment mix, four-wheelers have contributed around 52%, while rest is for two-wheelers, which is at 48%. Moving to slide 10, TG Japan and Minda have agreed on consolidating all its business under one umbrella, with MIL playing a significant role in the joint venture. Minda has already increased in holding in TG Minda to 49.9% in September 18. You might be aware of it. And TG Minda has been acquired with 95% stake. So TG Minda has acquired 95% stake in TG Sin from TG Japan in September 2020. With an objective to consolidate entire TG and Minda business in India under one umbrella, the board has in principle approved the merger of Minda TG with TG Minda. To ensure that the shareholding is identical post-merger, board has approved the sale of 1.1% stake in Minda TG held by MIL to TG for a consideration of 0.56 crores. Due to the above transaction, line-by-line consolidation will be discontinued for Minda TG as it will become an associate company. In another transaction, MIL board has approved purchase of approx 13% in Tokai Rika Minda Private Limited, as we call this TRML, from Minda Finance Limited as part of our committed group consolidation exercise for a consideration of 22.5 crores. TRML will now become an associate company of MIL and will be consolidated by equity method. As you might know, TRML is engaged in business of seat belts, gear shifters, locks, and safety devices for automotive application. In FY20, TRML reported a turnover of around 600 crores. Moving to slide 11, Harira Seating Systems, the merger scheme is now placed for final hearing on November 16, 2020. And as you know, the right issue of 243 crores has been successfully completed, and it was oversubscribed by 1.2 times. The company has largely used the money to repay its debt obligation and investment in Minda for acquisition of TV sales. That is all from our side, and now we can open the floor for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. A reminder to the participants, anyone who wishes to ask a question may press star and 1 now. The first question is from the line of Ashutosh Tiwari from Equirus Securities. Please go ahead.
Yeah, it's a congrats on good set of numbers. Firstly, on the two-wheeler alloy wheel plant, you mentioned 2 lines of commission. So, what kind of revenue expect in this year, in the second half, and then any color on next year, what we are looking at?
So, Ashutosh, we have just commissioned the line in September, and in the month of September, the sale was almost, I think, around 3 crores. So, the lines will now gradually being sort of stabilized, and we will be commissioning our another 2 lines. So, for next year, which is 21-22, our capacity, based on our total peak revenue of around 470 crores, we should be roughly around 60 to 70% of our capacity levels. But definitely, we will have better clarity maybe by the time we speak, maybe in February or March.
You said peak revenue will be 470 crores.
Yeah, that was the plant which we have put up. The peak full revenue was expected to be around 470 crores based on the total investment.
Okay. And sensors, you mentioned some number as part of others' sales. I missed that number. Can you provide that number?
Yeah, so the quarter was something around 50 crores.
50 crores in the first quarter, you're saying?
Second quarter.
I'm saying that this is 50 crores is from the new plant that you commissioned.
No, that is total sensor sales.
Total, okay. And so the new plant got commissioned over there basically?
No, so new plant has got 3 products. The first one, which is the high temperature sensor, has been commissioned. The wheel speed sensor is expected to be commissioned in the last quarter.
Okay. And what kind of numbers we can look at from this new sensors next year, basically, or overall sensors next year?
Maybe Ashutosh will give better clarity, if you don't mind, in the next call on this.
Oh, sure. And secondly, on this employee cost, like say this quarter is around 4 crores, and you mentioned that there was salary cut till August. So on normalized basis, this number should be how much on a quarterly basis?
No, so if you see the benefit in the total cost for a month was roughly around 6 crores, 6.5 crores on a monthly basis.
Okay, on a monthly basis.
Yeah.
So roughly 13 crores would have been the benefit in the current quarter due to lower employee cost.
Yes.
Okay. And we also have saved a lot on the other expenses when there's also decline YOY. Will some part of that will sustain when things normalize going ahead?
So definitely some part of it should sustain because as you know, the industry we are in, there is a lot of expenses which goes towards traveling and admin overheads like that. And I think we are still away from getting to a normal situation. So there is definitely a good saving. We expect it to continue that. That's number one. And number two, even on the rentals, wherever we have actually negotiated for a full year reduction. So those savings will continue, and in fact, to continue forward because we have actually reset the base. So whenever we give next year's increase on the property, it will be on the lower base. So that reduction actually is what you call, I would say, a long-term reduction which we have achieved. And also the negotiations which we have done on various administrative and overheads like consultants, etc., etc., they have all been negotiated for the full year basis. So we do expect those savings to continue.
Okay. So because, even if we remove that 13 crore saving on employee cost, and then also margin is 13.7%, despite the fact that in this quarter LMT sales are lower, so your alloy wheel sales would have been declined YOY. It is high margin. Despite that, margins are pretty good.
Right.
And lastly, on the profit from associate front, there's a significant jump over last year, 10 crores numbers. So which of the entities are contributing more right now in terms of profit from associates?
No, if you see the improvement in profit in associate is actually proportionate almost to the profit increase which you see in Minda Industries above. So it is, I think, generally in line with the group, wherein whatever sales growth and business growth we have seen, plus whatever actions we have taken from cost aspect, I think every business has contributed, I would say, broadly proportionately.
Okay. And last question, if I may ask, you mentioned that this TG, the association reorganization that you're doing, you will have a bigger role going ahead. So I think, despite, if you look at TG Minda, despite having a good big sales number, I think the profitability is a bit lower. So will we be looking at increasing profitability at that entity a lot over the next 2-3 years basically?
So definitely, Ashutosh, I think that is the plan. That once we consolidate entities into one, definitely we get immediately the savings of various overheads and common costs of common functions. That's number one. Number two, we are having a very strong focus on improving our margin profile in TG. And with our more and more active involvement, we do expect to improve its profitability profile going forward. In fact, if you see, even in this year, actually, we have done better than the last year in TG. So that impact is visible, and I completely echo with you that going forward we should be in a better trajectory from where we are today.
Okay, so thanks a lot. I'll join back.
Thanks, Ashutosh.
Thank you. The next question is from the line of Mukesh Saraf from Spark Capital. Please go ahead.
Yes, sir. Good afternoon, and thank you for the opportunity. First question is, again, just on the income from associates and JVs part of it, 10 crores this quarter is quite strong. Could you give some sense if there's some benefit or some improvement you have seen in Onkyo and I think D10? These were two entities where you had mentioned last time where you have a lot to probably improve there.
Yeah, so as I said, Mukesh, we have seen sort of margin profile improvement across. There is a good improvement in Roki also. There is a good improvement in TG also, which was, I think, a negative number earlier, which is now being into green. So I think all of them put together have made this movement from 6 to 10. And Onkyo is still actually for the quarter in red because of some operational issues. And I'm sure once we see that coming into green, that will further improve this number going forward.
Okay. So we can probably expect it to continue to kind of do well from here, this 10 crore number. I mean, obviously based on OEM volume, but broadly it can continue.
Yeah.
Okay. And second question is on the capex itself. I mean, so if I look at your net debt numbers from March to now, they're largely the same. Obviously done the rights issue. Our capex seems like we are probably at about 160-170 crores so far in the first half. So how do we see that going forward? Because we were also expecting some kind of a debt to come off with the rights issue that we were doing.
So Mukesh, you are right that what we have done is whatever funds we have generated from the right issue, part has been, as I said, invested into our subsidiary, associate JV company, which is TG Minda, for acquisition of TGC, and rest have primarily been utilized in deployment of debt. Actually, around 100 crores has been used actually in October, and that's when we have been completing our fund utilization. So it is not that entire thing was closed in September. The part has also gone into October. That's number one. In terms of capex and other things, because of the business volume growth, definitely a little bit amount of working capital also has increased, and that's where I think the net debt is broadly, while it is same, the amount which we have raised of around 240 crore has broadly been utilized, primarily in debt repayment, some of it, equity, and also capex and working capital.
Got it. Got it. And just last question is on this TRMN. We have acquired a 13% stake. I think in the past you were mentioning that you did not want to, get a smaller stake, and you're looking at probably a larger stake. So, is there any immediate plans to increase it further from the 13%?
Yeah. So I can't commit on the next step, but that is definitely part of the overall plan. So the first step was to, as if you remember, our long pending commitment that whatever is held outside of Minda Industries by the family company, we need to transfer everything into Minda Industries, and this was the last piece which was left out to be brought into India. So with this, we actually complete that exercise. So the whatever holding was there, that moves to Minda Industries, and that holding, actually we had an option to increase our holding from 13% to 30%. So that we will definitely be discussing with our JV partner, and we'll see that. We'll try to see if we can close it within this financial year.
Okay, and just could you give some other numbers for TRMN apart from the revenue which you have mentioned is about 600 crores? Could you give an EBITDA PAT number?
Do you have it handy?
I have it. You shall answer it in the passing.
Sure. Okay. No problem. I'll get back into you. Thank you so much.
Thank you.
Thanks, Chris.
The next question is from the line of G. Vivek from Goldman Sachs Investments. Please go ahead.
Yeah, this is GS Investment, not Goldman Sachs, and this is regarding the Harita merger. And it's a case of Tariq se Tariq. When will it get completed? And what value addition are you expecting from Harita merger? And what value can it add to Minda Industries? And top and bottom line, yeah.
Yeah, Vic, you are right. It is like a typical Tariq se Tariq. But on a serious note, we all know that because of pandemic, we had no hearings initially. And the last hearing we had been advised by the NCLT to publish some requirement to publish some ad for any objection, if at all. So that has all happened. So we are pretty hopeful that on the next hearing, which is on 16th, and I believe even the Chennai NCLT hearing for Harita seating system is scheduled in the same week. We should have an approval in place. So hopefully we should have this transition closed within this financial year. Secondly, in terms of the advantages, what we have said earlier also, that there are two advantages, large, which is first, Harita seating, obviously, while they have been very strong in CVs and tractors, of course, in terms of two-wheeler seating, they have been servicing only two key customers, which are TVS and RE. And once it comes into our fold, we definitely are confident of adding one or two more customers, and we have been actually working on that with them. Though passively, not very aggressively, because that we have to appreciate also in a listed company. So until the transaction is closed, obviously we have to maintain that distance, and we can't have active involvement in the operations of the company. Secondly, we have also been able to generate some business for them through our customers. One of the Japanese OEM, we have actually got some business for them, and also one CV customer we have got added into their kitty. So there have been advantage from both sides. And third thing, we have also started work, which we said initially also, that to launch the Harita seating systems into our aftermarket channel. We have a very strong aftermarket channel, which is with 600 plus dealers. So we are working with them. Already we started work now to launch their products into our aftermarket to see that we give a better growth to them. So overall, our target has been that we should be able to double that company's top line and outperform the industry growth, and maybe in the 4 to 5 years once we have enough wood. And that is the growth I think which company has also been expecting. So if you talk to the local management, they have always been sort of getting that shadow of OE, because of which they have been untouchable with others. So we are pretty confident that we should be able to add significant value to Harita. Now, secondly, whatever customers Harita has, some of those customers we don't have, like for tractors and like John Deere, they are the global suppliers, etc. So there we do expect to work with them and see that we add those customers or their customers into our product kitty. Or how do we sell our more products like lights, switches, horns, etc. to those. So we do have opportunity of cross-selling to each other's customers, and I think that is the bigger picture strategy behind Harita acquisition.
What about Harita Ferrer, the subsidiary?
So that also is part of the transition, it's part of its listed entity. So it will come as it is.
Now, is it that is also an attractive proposition for Minda Industries? And if so, how?
No, so
that is mostly into exports, I believe, no?
No, so actually the two-wheeler seating part, larger business is in Harita Ferrer.
Okay. And coming to the Minda Industries original business, how do you foresee after the setback of COVID, everything is on the recovery mode, the opportunity size and it keeps on increasing. So what's the growth rate we can expect on time to come for Minda?
Yes, I wish I was having a clear answer, Greg. It's like almost shooting in the dark to guess what the numbers could be, looking at what the markets are doing too, because while we are seeing a very, very good demand momentum, and the market, we all know, has been suppressed for last 2 years because of various reasons, and one large reason being migration from BS4 to BS6. So definitely in past there has been a lot of demand which was, I would say, artificially or whatever reason suppressed. So that demand also is expected to come to the market. Second, because of pandemic, there is a very good demand which we believe is there in the market currently because of personal mobility and preference for owning our own vehicles. Obviously, affordability is a key. So all these factors are definitely giving a good momentum to the industry. Now, how long it continues, I think it's anybody's guess. But what we have been saying is very clear, and that's the trajectory we have been working on. Because end customer sale is not in our hands. So obviously, I would not like to go into prediction what the end consumer demand will be. But if you see quarter after quarter, even if you see this quarter, the OE volumes, absolute volumes have been lower by 8%, whereas our top line is higher by 8%. So there is a clear outperformance of almost 16%. So our aspiration or our endeavor has always been to sort of outperform the industry growth, and that's what the path we have been in last few years, and we do believe and we are confident that in next few years we should be able to continue on that path of outperforming the industry growth. Whatever that growth is, we should be able to do more than that.
Okay, sir. Thank you. Keep up the good work.
Thank you, sir. Thank you.
This is for Mukesh. For TRMN, last 2 years, the gross margin has been in the range of around 25-26%, and EBITDA is at around 8%.
Thank you. We would request the participants to please limit your questions to 2 per participant. The next question is from the line of Vijay Karpe from Bryanston Investments. Please go ahead.
Thank you for giving me the opportunity, and congratulations on a strong set of numbers. My question pertains to the alloy wheel division. Out of the 3.6 million two-wheeler capacity, how much is coming in this year?
Vijay, as I said, I think it's very difficult to put a number because when you are in a startup phase and in a ramp-up phase, there are a lot of challenges come en route. So we are not currently in a situation or a stable situation where one can actually commit or comment on the absolute number and then get question on that at a later stage. So I think the way we have been working, I wish that this pandemic ends soon and we should be able to organize a trip for all the investors and analysts, everybody there. We have built a state-of-the-art, very high-tech plant there, and I'm saying I think you have to see it to believe it. I would say very confidently say this is the best plant which you will find in the country. Very highly automated plant. Having said that, to stabilize definitely takes a little bit time because all these things, automation which you have done, in the country has been done for almost, I would say, the first time. So there will be challenges en route. But once we stabilize, as we said, we should be able to stabilize, we should be able to commence all the 4 lines by end of FY21 and take roughly around couple of quarters to stabilize the plant. Post that, I think it will be fair for you to expect us to give some stable number. Until then, I would like to sort of stay away on committing any absolute numbers.
All right. Then anything regarding on Q2FY Minda? I think we have not subscribed to the rights issue, right?
Yes, you are right.
Okay. And my last question. Now Maruti has started the 3rd line in Gujarat. So how will that benefit our alloy wheels plant?
So first of all, I don't think they have started the 3rd line. My information is they are planning to start in next year. But whenever they start, this will definitely have a very positive impact on Minda, because I think we were among the first ones to move to Gujarat, and we have set up 5 plants there dedicatedly for Maruti, while we are also serving other customers from there. But Maruti has been the anchor customer while we have set up and had a large investment in Gujarat. So once we see any volume uptick, I think we should be able to ramp up our volumes very fast. But if you see in terms of alloy wheel, as of now, we are almost 100% of our capacity currently, if you see in September and October. So we are currently in process of putting another 30,000 year wheel line there. So our capacity will increase by that. So as of now, installed capacity is 120 at Bawal and 60 at Gujarat. We will be sort of increasing that 60 by another 30. So to be prepared before Maruti commences the 3rd line, we should be able to have capacity to sort of support their demand.
Great. Best of luck.
Thank you.
Thank you. The next question is from the line of Siddharth Bera from Nomura. Please go ahead.
Yeah, thanks, sir, for the opportunity, and congrats on a great set of results. Sir, first question was again on the other part of the business where we have seen a very good improvement compared to last year, like 54% of YOY. You indicated that there will be sensors, but I would assume that sensors will some part of it be in the last year also. So if you can just help us understand how this strong growth is coming in the other part, which is driving demand here.
So sensor, there is one new product which is a wheel speed sensor. So what we have done is, I will take 30 seconds to help you understand, is that we have got this line constructed in China. So because it was not only buying of technology and capex equipment, it was also buying a couple of Korean customers. So what we did was, with that newly constructed line, we have manufactured some volumes of inventory in China and then moved those lines to India. So currently from that inventory which has been produced, we are servicing the Korean customers. And from 4th quarter, once this line is up and running in India, we should be able to start exports from India. So that is there. Then another business which is Minda Koraku, which is our blow molding business, that has also seen a good growth. And the last, which is the biggest, is our aftermarket division, which earlier used to be Minda Distribution Services. It is now a division of MIL after merger. So MDSL has seen a very good growth. If you see on a quarterly basis, the aftermarket growth, what we have seen is more than north of 30%. So that is also giving a lot of growth to that segment.
Got it, sir. So this sensor, what will be for the new sensor business, what should be the ramp up? How to understand, say, in the second half and in the next year, how much ramp up can happen? Any color if you can give on that?
So Siddharth, again, I think this is same like tool alloy. So we are here, actually we are still to commission the plant in 4th quarter. So maybe once we commission, we should be able to give you a better clarity in terms of volume for next year. Current year, we may not have any significant revenue from these 2 new products.
Got it, sir. And lastly, on this Harita business, I think a lot of our customers in the CV segment are launching new platforms and new models under the BS6. So have we seen any, material improvement in our realizations or per product for these new products? Any color?
For Harita?
For Harita, yes. Harita seats for the CV segment.
Won't be able to comment on Harita, honestly, Siddharth.
Okay. Okay, sir. Thanks. I'll come back.
Thank you.
Thank you. The next question is from the line of Basudev Banerjee from Ambit Capital. Please go ahead.
Congrats for good set of numbers. A few things as new businesses continue to get added, or there is some shifting from associate to subsidiary. So just wanted to understand this 8% YOY revenue growth is clean growth, or it's on addition of some new entity coming as a subsidiary from associate as such?
No, there is no entity which we have made from associate to subsidiary. In fact, once this merger is through, and this merger will take some time, TG Minda and Minda TG, because it will be a court-approved merger. So once this merger is through, then almost like 70 odd crore of top line will reduce. It will not increase from that perspective as well. Because consolidating. Once it becomes associate, you will stop consolidation.
In this quarter, there is one Delvis which is entity which was not there a year ago.
Yeah, you are right.
Yeah, and how much Delvis delivered in terms of revenue? You mentioned in earlier comments, I suppose.
Yeah, so around 50 crores.
50 crores, okay. And sir, yes, as some participant earlier said that despite alloy wheel mix coming down, overall margin has moved up. So it is primarily led by good maintenance of other expenditure. And as Vora sir was also saying that this reduction is structural and permanent, irrespective of revenue moving up. So if you can explain like how and what are the stuff you did in last 3 or 6 months to reduce this as such.
Basudev, as I said little while back, please don't take me that I'm going little kg.
No. So I might have missed out. No.
So we have done a lot of actions in past. So obviously, when we are talking of other expenses, there is a big aspect is traveling. So traveling, this pandemic has almost negligible. Another is your various rents, which we say our rental expenditure almost annually is around 80 crores or so because of various warehouses and various locations spread out the country. We have a good reduction there. We have got a lot of consultants, auditors, advisors. Everywhere we have reduced the fee. And wherever we have reduced, mostly we have tried to ensure that we do for full year. So that is what I was saying, that the large part of the other expenses or the reduction we have seen in Q2 ideally should continue broadly moving to the next couple of quarters as well.
Okay, from a couple of quarters as such. And sir, as input commodity prices have been increasing for many OEMs as such, so your gross margin is also largely stable. Do you see any risk to input commodity pricing for you in the forthcoming quarters as such?
So there is, I won't say a risk, Basudev, but definitely in a price, when a price increases, there is always a lag between a pass-through, because most of the contracts we have, wherever there are major contracts like alloy wheel and all, it's a pass-through with a 1 quarter lag. And we do, and on a conservative basis, we don't account for that increase unless we have a approval from the customer. So there might be a possibility in an increasing scenario that you may have a little lower or a higher cost in the quarter and gets recovery in the coming quarter. But on a full year basis, because most of our contracts is structured in such a way that either we have a quarterly price adjustment or somewhere half-yearly or somewhere annual. So on an annual basis, it should ideally average out, and we should not have any material impact to our financials.
That's great, sir. And in your presentation, as per the cash flow statement, where first half investing cash flow is around 160 odd crore, how much of it is in investments and how much is in capex?
So large part is in property, in capex, and also that investment in TG Minda and Onkyo. So we have equity infusion of almost 44 odd crores into our associate company, and I think almost 150 crore in our capex, which is primarily into the alloy wheel project and sensor project, and also plus some small sustaining capex also, or replacement capex of roughly around, which includes in 150 of around 50 crore of such capex.
So, what should we see the year end with total investment and total capex this year?
So, on an overall basis, we should be somewhere around 250, because the large part of alloy wheel capex, while it has happened in first half, little bit still pending, because 2 lines of that fourth line we have just ordered yet to arrive, which will come in maybe around January. So, putting that in totality, we should be somewhere around 250 crore for the full year.
And the investments?
Investments, as I said, the TRMN which we have just announced, that 22.5 crore will come, and we had started talking to our partner to take the stake to 30% to be a meaningful partner and have an active role in the joint venture. We already have agreed for having our deputy managing director position in that company, TRMN from Minda. So we will be having an active role. So once we do that, if that happens, then that investment in TRMN should be around 65 odd crore in total.
So then full year can be 120 overall.
Yeah, assuming there is nothing else.
Sure. And last question, if I can ask, so Maruti's production, one can see how it is up year on year for last few months, and you are one of the key suppliers also. So how is the indent continuing beyond October, sir? If you can highlight, that will be great.
So things are definitely looking good, positive, but you know that the indents are all month forward. So if you see November definitely is looking good. But then you do have your festive season holidays for a week roughly that you have to factor in. And December again you have their annual shutdowns around Christmas, post-Christmas for 3-4 days. We know that Maruti has did some sort of preponement of their shutdown somewhere in May during the lockdown period. But assuming they do take some sort of maintenance, because normally we know the Indian sort of thought process is once we go to buy a vehicle in January, obviously everybody wants to have a 2021 manufacturing because the year change have a big impact. So because of which November and December volumes are normally little lower than October. But if you see on an indent basis, definitely things are looking much better if you see on a year-on-year basis.
Yeah, that's more like the great thing, because it's anyhow seasonally weak. But as you started your initial comment that it's more of channel filling, so whether post channel filling there is a larger decline in production outlook or not. So that's okay, thanks.
Thanks for that.
Thank you. The next question is from the line of Ronak Sarda from Systematix. Please go ahead.
Hi. Sunil, just a clarification. Did you mention that almost 100 odd crores of the QIP money was received in October? Because if I
No, not received. Not utilized.
Utilized, okay. Rights issue, sorry. Rights issue, yes. Okay. It's utilized you mentioned, because I see in the cash flow statement that the entire money was factored in the first half.
Yeah, it was utilized. It was not fully utilized by end of September, but fully utilized by, I think, 7th of October.
Sure. Yeah, we have to give some notice for the lender to make the prepayment, so that's what I was taking from that.
No worries. I didn't hear you properly. And second, the alloy wheels for the Korean manufacturer, the new technology which we had, bought last year. So now, since it's almost close to production, can you highlight how much is the order book there?
No, so as I said, it is not close to production. First of all, we will start commissioning activities now, and post that there is a customer validation, checking, etc., which we expect in fourth quarter. So hopefully production should start thereafter, and maybe then we will be able to give better visibility, because we have got both the Korean customers some wheels orders. And as you know, this is not a big project. It is a part of our existing plant in Gujarat to optimize and to have this learning curve. We are putting additional line, which will use a lot of common common plants within the common sub plants within the plant, like your coil shop, like your little bit else. The existing plant will get used, and what we are putting is a very a small 40-50 crore worth of investment for this 25,000 wheels per year capacity. So as of now, it's a very small investment, and once it is successful, we are talking to them, and we might then see a bigger investment in future if successful.
Okay. So it is 25,000 wheels per month.
Yeah, capacity.
Okay. Sure. And also, I mean, just if you can explain this Minda TG and TG Minda deal. So, because the TG Minda, I understand, is in the airbags and seat belts. What does this Minda TG do? I mean,
so Minda TG is a very small company where we had 51% holding, and we used to consolidate. It makes fuel hoses and brake hoses. Its annual revenue is roughly around 60 to 70 crore only. And that is almost like 8-10-year-old company, and we have been hardly into green, sometimes marginally red. And the strategy has been that we have been discussing with TG that TG also had two entities in India. One is with TG Minda, which is airbags and body sealing, etc. But TG also had an entity in South, which is called TG South India. So everything now comes under one umbrella. So TG Minda acquired, TG South India, and now once Minda TG also get merged, it all comes under one umbrella of TG Minda. So that is the overall plan, and this what we said, it should bring synergies immediately in terms of your operational synergies, and also maybe utilizing some of our tax losses also.
Sure. And I mean, what product would TG South India manufacture? It is again airbags and
no.
seatbelts
So
and all?
TG South India is primarily into your plastic body parts, like your bumpers and all.
Sure. So now it was practically three products: plastic body parts, fuel and brake hoses, and the airbags. That's all, right? Okay. And how would be the total revenue size of this, the three put together now?
So TG Sin was roughly around 600 crores, TG Minda roughly around 350 crore, and this, so all put together should be 1,000 crores.
1,000 plus crore. But this would be accounted on equity method and not consult, right?
Yes.
Sure. And just on the switches business, I mean, despite Maruti seeing a volume growth for the quarter, we have actually seen a decline in revenues. What would be the reason for that? Is it like non-Maruti customers, or is it more on product mix?
I would say there are two reasons. One definitely is the product mix, because we know that lower end products are sold more than the higher end as of now. And also the uptick in four-wheeler switches has been little lagging, and two-wheeler was first to grow. So if you remember the volumes in July, two-wheeler was doing better than four-wheeler in the initial part of the quarter, but of late both of them have done better. So it is, I think, primarily due with the late catch-up by CVs, and going forward, I think we should be okay.
Thank you. Ronak, we would request you to please come back in the question queue for any follow-up questions. A reminder to the participants, we would request you to please limit your questions to two per participant. The next question is from the line of Nikhil Kale from Axis Capital. Please go ahead.
Yeah, thanks for taking my question. Congrats on a very good set of numbers. So my question was on the lighting order wins that you mentioned, both on the two-wheeler side as well as four-wheeler side, the Maruti order win as well as the Davis order win. So if you could just throw some more color on it, mostly if you could just highlight the potential revenues that these orders could add, and also the timelines.
So definitely, Nikhil, post-acquisition of Davis last year, we have seen a very positive traction in our four-wheel lighting, and I think that has been the key reason, the factor behind acquisition of Davis. We have actually been almost every quarter we have been adding at least one business from lighting perspective, and it's all high value business because they're all LED lamps. So initially we have got from two Japanese OEMs, then we again got from Maruti, now we again got from Maruti a rear tail lamp. So in terms of total business size, if you see all these put together, 4 projects, they will be north of 200 crores on annual sale at peak revenues. And this definitely, I think we should give you a heads up. It might need putting little more investment in our lighting business in Gujarat, which we currently don't have. We are currently working on it to see what is the best way to do it. So to realize this 200 crore of potential, we might need to do some capex as well. We don't have any proposal as of now. Internal teams are working. Once we have it, then we will let you know.
Okay. Okay, thank you. And also on the two-wheeler side, when can we expect these revenues to come in on the two-wheeler side?
It's already started. So September we had around, you are saying two-wheeler alloy wheel, right?
No. So the two-wheeler lighting orders you're saying, RE, TVS, Bajaj and Honda.
So they are all a year or two ahead. So you know that the ordering cycle, even the lighting, while I said 200 crore of peak revenue, the revenues normally would start from 2022 onward, FY 2023. So you have 1.5 to 2 years of cycle before it goes into actual production.
Okay. And the Delvis orders that you've mentioned, Minda and Audi. Now, if I'm not wrong, Delvis is not really into a lot of manufacturing, right? So are these orders more on the service side or are they for products? And if so, are we also planning to manufacture them for Minda and Audi?
No, so as of now, Delvis does not have any manufacturing. And while our endeavor will be to see that we make India as an export hub, but initially whatever the products are, they are currently getting manufactured through contract manufacturing. And in terms of orders, they have a mix of both service and product.
Okay. Secondly, on the two-wheeler alloy wheel, you mentioned that it's been commissioned for a couple of months that the lines have started. Just wanted to understand, there would have been some impact on the margin front as well, right? Because the revenues wouldn't be there and you would have incurred certain costs, be it labor or other expenses. So was that impact material? Can you just throw some color on that?
Yeah. So this plant was commissioned sometime in September. So if you see on a full quarter basis, you won't have any material impact. In fact, even depreciation for the whole quarter for this effectively has been roughly around 1 crore. Not that big. But yes, going forward in Q3, we will have some impact of Q3 and Q4 both, some impact of this two-wheel plant because it will be under ramp-up mode, and we should not be expecting this to generate profits in the first 2 quarters once it's stabilized.
Okay. And just then lastly, last question, you mentioned that if the lighting is in good order wins, and that might require certain investments. Also on the two-wheeler alloy wheels, you talked about a second phase possibly in 2 to 3 years. Any other big capex that you could incur on some of the other segments if the demand kind of sustains? You see good double-digit kind of growth going forward in FY22 and then that continuing in FY23 as well.
So if you see that we have actually done a lot of capex in last 3 years, and for any revenue growth for up to 20-30%, we should be able to. I'm talking on overall numbers, while some of the businesses are already reaching at around 100% capacity. But on a global basis, for another 20-30% kind of sales increase, we should be able to absorb within the existing plants. But wherever the business growth is much more, like for example, if you see lighting, our lighting four-wheeler entire annual sale is roughly around 400 crores. And on 400, if you have to add 200 crore of sales more, I'm sure you'll appreciate that today we have 4 plants for this 400 crore worth of sales. Now, when we talk of adding another 200 crores, you will appreciate that we will need some kind of investments. So if wherever we have a exponential growth, there we will see on a case-to-case basis how do we optimize. But if you see a lumpy capex, I don't think we expect any lumpy capex as we have seen in past because of primarily moving to Gujarat. And at the same time, we have also coincided 2 more plants, which was of lighting four-wheeler plant in Chennai and also lighting two-wheeler plant in Hosur. So in the period from, I would say 17 to 19, we had a huge capex which has happened. And we don't expect that kind of capex cycle to come soon.
Thank you. Nikhil, we would request you to please come back in the question queue for any follow-up questions, as we have several participants waiting for their turn. The next question is from the line of Ashutosh Tiwari from Equirus Securities. Please go ahead.
Yeah, sir. So you mentioned that this alloy wheel plant is operating at full in September, October. This is only for Gujarat plant or Bawal including?
Both.
Both operating at full. So, like say, you also mentioned earlier that there was some bit of down trading earlier in the quarter by customers basically. So now are you seeing good pickup because alloy wheels are mainly used in the upper variants and all, mixed to upper variants. So are you seeing that thing normalizing now?
I didn't get a full customer. What is downward trend? I didn't get your point.
See, in between in the passenger vehicle segment by different OEM, there was a shift toward lower price vehicles and all by customers.
Right.
So are you seeing a trend that alloy wheels are mainly used in the upper variant and the middle variant of these cars? Are you seeing a demand uptick over there also in terms of shifting to upper variants and all compared to 2 3 months back?
No, actually, alloy wheels, if you see, exports are now actually going into a lower end also. Like even in some of the A segment cars, we will find the alloy wheel option. So actually, the penetration of alloy wheels has been improving, even though from a model perspective, it's a A segment or B segment more than C or D, and it does have direct impact on switches. But because alloy wheel, we do not had so much of penetration, and the penetration of alloy wheel is improving, and that's why I said we are currently now in process of installing another 30,000 wheels a month line in Gujarat, which we already have, and it's into a construction mode, and we should have that up and running in a couple of months max. So before the customer demand increases, we should have our available capacity, and whatever demand we see or capacity we see currently is on a fixed day basis. So if required, then we also have that 7th day which can straight away add your 10-12% to the capacity. So from that perspective, I don't think we should have any capacity constraints. And you know that Minda as a group, we always try and be ahead of the demand curve to make sure that the customer demands are met well on time, and we have that capacity available.
Okay, got it. Secondly, we also mentioned in the switches segment we got new orders of sunroof and gear shifter switches and all. So, just can you throw some light what kind of content these can increase, they can provide basically, so what content of these switches in the vehicle, and any color of what kind of extra revenue these can provide?
Do you have any idea about the kit value?
Yeah, so the orders to put together could be around 500 per car.
500 per car, okay. And this gear shifter is what exactly?
No, it's a gear shifter switch, not a gear shifter which is made by TRMN.
It's just a switch.
Okay.
So basically, now these switches were not manufactured by us, they were largely imported. Going forward, we are localizing them. So now we will start with Maruti and then we'll add another system.
Thank you. Ashutosh, we would request you to please come back in the question queue for any follow-up questions. The next question is from the line of Anubhav Rawat from Monarch Network. Please go ahead.
Hello. Hi, good afternoon, sir. Just quick 2 questions. So, sir, on the lighting front, just wanted to know, sir, what is our share between 4-wheeler and 2-wheeler?
So, I presume you are talking about market share, right?
No. So, the revenue split, any broad number, how much would we be doing from 4-wheelers and 2-wheelers?
Yeah, so broadly it is like 45-55 in favor of 2-wheelers.
Okay. And so, would the margin be same in this business or is it different?
Broadly, it is same.
Okay. And we would be the 3rd largest player in this overall lighting segment?
Yes, we will be.
Okay. And sir, just wanted to know this telematics and SAC business, sensors and actuators. Does this fall under switches or does this fall under the other category of our revenue?
Telematics is part of other. You said another is what?
Sensors is now SAC. So SAC earlier used to be sensor actuators and controllers. The sensor is part of other businesses. Yeah.
Okay, so sensors and telematics is others, right?
Yeah.
Okay. So would that be a major chunk of others, or is it a small part?
No, it's a significant part, maybe 20%.
Okay, understood. And so just one last question. So this acoustic, so similarly, how much would be our domestic revenue and what would be coming from Clarton, percentage-wise, a broad percentage?
1/3 from India and 2/3 from outside India. So that's what we do.
Yeah.
Okay, fine. And just one last question. So on the RM front, sir, what are we doing to increase the localization? And I mean, how much of RM do we procure domestically?
So if you see from RM perspective, the large part of imports is alloy for our alloy wheel plant. That is, currently we are working on creating a local source, one of the major primary producer. That will take some time because while we have got some local source alloy, we are currently in the testing phase. So that is the bulk of it. But if you exclude that, our imports will be something around 8 to 10%.
So, thank you. All the best.
Thank you.
Thank you. The next question is from the line of Dhiral Shah from Phillip Capital. Please go ahead. Dhiral, your line is in talk mode. You can go ahead, please. I would request you to please unmute yourself if muted from the handset. As there is no response from the current participant, I have muted the line. The next question is from the line of Swapnil Shah, an individual investor. Please go ahead.
Yes, thank you for the opportunity. I would like to ask two questions. One is, could you just brief about the new products which may be under development? And second, could you please elaborate on the internal controls and risk management, especially in this lockdown phase? How did you achieve robust internal controls and risk management? That's it from my side.
So, Mr. Swapnil, as a strategy, we normally don't comment on products which are under development because some might see light of the day, some might not. We have a R&D center in Pune under brand called Create, and we also have a lot of R&D happening in all our plants. And I'm sure you'll appreciate all those R&D projects. Some might get commercialized, but majority don't. So that is the key reason we normally don't sort of comment on what are the products under development, because until it is developed, there is no point in sort of building an expectation which might not materialize. And in terms of internal controls, as I could understand your question correctly, you said internal controls during lockdown. So yes, I appreciate that internal controls need to be there forever. Nothing relating to lockdown. So definitely we have not done anything exceptional as an exception for improving internal controls in the company just because of lockdown. We continue to work on strengthening our internal control systems and processes, and there is no correlation which I could do with specifically for lockdown and internal controls.
Specifically, I wanted to ask, how did you ensure continuity and ensure robustness of internal controls during this tough phase? That is what I was asking.
I'm still not clear. Trip, if you could guess how do you correlate internal control and lockdown?
No, I think while you answered it, there was nothing which was done specifically to highlight that it is a special measure in terms of control, because I think as a corporate we have very robust control systems in place, whether it was lockdown or beyond. Just that when there was a lockdown, a lot of things got facilitated online, and for which we worked relentlessly. And the control systems and risk management is a practice that we do through all our processes, and it's a standard thing. So nothing specially done during the lockdown.
Okay, fine. That's it. Thank you very much.
Thank you, sir.
Thank you. The last question is from the line of Mukesh Saraf from Spark Capital. Please go ahead.
Yes, sir. Thank you for the opportunity. Again, just one question from my side. I was looking at the alloy wheel business numbers last year, the Minda numbers, and the EBITDA margin was close to 30%. In the past, when you had done 25%, I think you had generally guided that it will be tough to maintain 25%. But 30% last year, is there a one-off? How sustainable is that?
There is no one-off, Mukesh. If you are referring to the numbers for 1920.
Yeah, 1920.
So there is no one-off. So what happens is, Mukesh, you appreciate that when we have put this plant, we have put with the anchor customer, and initially our capacities have not been fully utilized, whereas we have agreed for a pricing based on the installed capacity, and there were annual year-on-year price reductions. I think the customer has been kind enough to accept our request to defer some of the price reduction for next year. So that's why you see some good profitability in 1920.
Okay. So that 30% is in that way not sustainable because you will take those price reductions this year.
Yeah, that's one. And what is happening is that as time progresses, more and more models which we are winning, they are at a very, very competitive rate, and they are not at a nominated rate which was there when we installed the plant.
Got it. Right. Understood, sir. Thank you. That's it from my side.
Thank you, Mukesh.
Thank you. That was the last question. I would now like to hand the conference over to Mr. Sunil Bohra for closing comments.
Yeah. Thanks, Aisha. So thank you, gentlemen. Thank you, and I would like to thank everyone for joining the call. I hope we have been able to respond to all your queries adequately. Wish you a very happy festive season and a safe Diwali. For any further information, we request you to please get in touch with us. Stay safe, stay healthy. Thank you.
Thank you. On behalf of Minda Industries, that concludes this conference. Thank you for joining us, and you may now disconnect your line.